Good morning, I am Adam Harris, and this is The Day Ahead.
A quick reminder to subscribe to this channel below to receive alerts and daily market analysis videos of all the key asset classes. On the economic calendar for today, we have Canadian CPI data at 1:30 p.m. and US interest rate news from 7 until 8 p.m., which is likely to create market reactions. In currencies, will the US rate news bump the euro out of its daily range? In the commodities on the move, gold seems happy to climb higher, and in the global indices and equities in focus, we see plenty of bear action. You can jump to any chapter by clicking on the time link in the description below. So on the economic calendar today, from 1:30, obviously there's a whole bundle of high impact news around the Canadian dollar. So I do expect some increased volatility on that particular currency pair, but my main focus will be this evening at 7, going on to 7:30 around the Fed's interest rate decision, where there is an anticipated rate hike. So it may already be priced in, but also following that, the 7:30 will be the FOMC press conference, and really there's usually quite a bit of volatility around this. It may well be priced in, but at the same time, there may be something that gets said that is unexpected or potentially spooks the market. Traditionally, we do get a stronger US dollar. I'm not looking to, when we get a rate hike, I'm not anticipating trading this at all. My intention is to be on the sidelines and just watching this and being aware of potential increased volatility. Starting with the currencies in play and looking at the euro, US dollar, we can see it's still within this overall range. No clear direction today, and we might get a boost out of that in either direction. Because we're sitting right in the middle of the range, you can see we've actually had some resistance here recently. If we do get a much stronger US dollar reaction, or it falls out that way by midnight tonight, so in other words, we'll only really know by this the total reaction by this time tomorrow morning. We'll see price back down here at the low. Otherwise, we might see a reaction and get it back up and get it out of this range. So it would be nice to get it out of this range just so we can ultimately return to or resume some sort of trend, and really hoping that that will be the case this evening. We look again at sterling, and our sterling is back up. It's below a level of resistance, and again, it'll be interesting to see how that plays out today. We may see it head up towards this level closest to 7 and 7:30 p.m. and then see it get knocked back from that. So just watching that, keeping an eye on that. CAD yen, our swing trades, or my swing trades at least for the last week, so that's continuing down. I'm pretty happy with that. Momentum indicator is nice and happy and healthy. Aussie Kiwi the same. Actually, that was almost a really high probability setup there, just because this has been such a nice and happy, healthy trend. Looking pretty good. Euro yen, I'm keeping an eye on. That's not ready yet. This is something that I could wait a couple of weeks for. Really waiting for this to ultimately build up. I'd like to see lower highs and lower lows and break through that level. It's not there yet, so that's still baking, so to speak. And pound Swissy is still sitting within this range and deciding what it wants to do. It's not a super strong setup. It should actually have continued. So in other words, if it was really bearish, it would have just resumed the trend. But I'm going to be keeping an eye on it anyway. Still waiting for it to break the lows here anyhow. So that one, we'll just keep an eye on that for the next couple of days. And that might even be moved by this evening's news as well. In the commodities on the move, looking at gold, it's very nice to finally see gold actually starting to pick up. It looks really good on the weekly as well. So we've got a nice weekly uptrend. We also have a nice daily uptrend, and so good. Looking forward to seeing that create some fresh highs today. Not sure how that'll be impacted by a stronger US dollar, but actually there's very much a possibility, of course, that we could get a weaker US dollar as well. So it's just that because of that range that we've been stuck in for a while. Silver looking very keen to head up towards its level of resistance at 1480, and ultimately if that does break through that, we'll see a significant shift, of course. So that's why I say there is that possibility of a weaker US dollar. Palladium also got some bullish signs there as well. Some nice little bullish candle here following yesterday's bearish candle in the buy zone. Also wants to take a run at that level. Then if you have a look at Robusta, it looks as though it's finally, it's long overdue. It's doing a bit of a retracement, and I'll certainly be looking for swing entries short and evaluating that when that happens. But I'm thinking that may well only be next week based on everything else we've got on our plate. We've got Thursday and Friday, and then we'll be back into next week. So again, we'll see what I'll be doing with that. Otherwise, it looks like we'll be revisiting that in January. And then looking at lumber, I've gone down to the 4-hour time frame here. Really, there's just a lot of testing of support here at 318, and I can just see the MACD is actually climbing. So although we're getting some sort of equal lows here on these on this candlestick here, for example, against these lows here, we're still getting the MACD climbing. So there's just a lot of either consolidation or a potential change in trend occurring here. There's certainly a battle going on, and it's not really as weak as it was at this point in time. So just keep an eye on that. Back to those bearish global indices and having a look here. Wall Street's actually sitting on a level of support, and of course if we do ultimately get, say, a weaker US dollar, reaction this evening, we may well see this then take a bit of a bounce and come back up to test this. So that's, but we are sitting at a relatively significant historical level if we go and say compare that to the S&P 500 on a different time frame, on a higher time frame. Looking at it on say the monthly time frame, we can actually see here, or this is a weekly, I beg your pardon, it's heading down towards support levels and starting to push through. If we head through that, we'll head obviously down towards 2500, and so we are testing those lows. Then if we move away from the US towards the UK, we can see now that we've broken through some key levels here. These are actually, these thicker lines here are actually monthly support resistance levels, and we're sitting at the highs, believe it or not, where we are right now today on this weekly time frame, is we're sitting actually at the highs of the dot-com and the credit crisis, dot-com in the 2000s, and the credit and mortgage crisis as well in 2007. So this is really key. We're sitting on this side of it. If we head below that, that will be psychologically significant for us. We'll be sitting back down below the highs, not really having got any growth out of this market. So, and our next level down is sitting closer to 6,400. So sitting at quite a key level today. It'll be interesting to see if there's anything on the news that kind of kicks it that way. And then just looking at, say, Hong Kong, Australia, all of the remainders, all continuing to look bearish and heading a little bit lower. Australia, for example, here well below that support level and starting to edge a little bit lower as well. And that's really it in terms of the indices today. Onto the selected equities in focus, starting off with Google. Alphabet here, just noting that it's trying to stay above 1,000 there. This monthly candle just got a little bit of a wick or a shadow underneath it, and so it's trying to push upwards and stay there. If we compare that to, say, Amazon, now we are 2/3 of the way through December, and looking, Amazon is also desperately trying to stay above that 1,500 level, and but it's quite a bearish candle. We've given back all of our gains last month, and so it'll be interesting to see if we can push back over the next 10 days, which would be a surprise, just because it would be a really last-minute rally. We would then end up with a more bullish candle. That would be unusual. I'm not expecting that based on the fact that we've given back all of last month's gains. That in itself is a big sign of weakness. Then moving on from the sort of historically bullish stocks onto the more bearish ones, having a look at, say, Barclays. Barclays is worthwhile noting simply because it's also now continuing back down towards that 150 level, maintaining its existing downtrend. Looking at Standard Chartered as well. Standard Chartered I've been following on the weekly time frame. It's now back in the moving averages and producing a bearish weekly candle, so anticipating that this will roll over and start to head down and resume its trend. And then looking at, say, BP finally. BP worth noting because that's now broken through to fresh lows, seems to have decided to move below the 500 level and head down and basically start to investigate new lows. It's a bit more of a choppy type of chart, but it certainly looks as though, generally speaking, it's looking an intent on heading lower. So generally speaking, the more historically bullish stocks have now started to show some signs of weakness. They're not really looking very strong at this point in time, and the bearish ones look as though they're pretty much happy to continue heading lower. So that's, I'm happy to short some of the more bearish ones, traditionally ones. These ones on my list, and just very cautious with the historically bullish ones at this point in time. Not there yet, not ready to short those. So that being said, ladies and gents, I want to wish you a wonderful day. If it's trending, I'll be there.
Just a reminder to hit the subscribe button. If you want to stay abreast of what's happening in the market, I'll be producing and bringing you the latest in the markets every morning in a freshly produced video.